Hi, I'm Mortgage Mark. Let's talk about the 5 categories of credit. So your credit score, when a mortgage person pulls it and says your score is X, it's made up of 5 different categories. The first and most obvious is your payment history. Do you or don't you pay your bills on time? That is 35% of your score. The next biggest category is what people don't realize. They don't understand that it is 30% of their score. It's called debt utilization. So debt utilization means that if I have a $500 balance on one credit card and that has a $500 limit, that card is maxed out. That hurts my credit scores. That same $500 balance on a $5,000 limit credit card, it's only 10%. That helps my credit scores. So guys, recognize that's the easiest thing you can do to make sure your credit scores are where they need to be. Call up your credit card company and ask for a bigger limit. I'm not saying you go spend it. I'm just saying increase that limit and chances are your scores will increase without doing anything. So also recognize there's certain ratios. You want to be under 50%, for example. Just work on paying those down and keeping the low debt utilization balances. The other 3 categories, relatively small. Length of history, meaning how long have you had a credit card, is 15%. So if you just open a credit card in the first 6 to 12 months, it's really going to hurt you in the first 6. It's really good, not going to hurt you too bad after 12. And after that, no big deal. But just realize the longer you have a credit card, the better. That's why I tell folks when you pay something off, you don't go cancel the card. The last 2, it's based on inquiries and the types of credit. The types of credit means and those each are 10% by the way. Types of credit, like if you got a mortgage, a car, and 3 credit cards, that's a great mix. If it's all credit cards, not ideal, but it is what it is. And then as far as the inquiries, recognize, yes, if you go apply for 4 credit cards tomorrow, it will hurt you temporarily. But after 120 days, those go away and we don't know it. So recognize that when you do pull a credit report for a mortgage or a car, it doesn't hurt you or impact you. Not the way you think it does with credit. So when people say, oh, don't pull my credit, that's for credit cards, guys. Mortgages, they want you to be informed. So recognize those 5 categories. Pay your bills on time. Your debt utilization, that's 65% of your score. Just do those 2 things alone and you're on your way to having a great credit score. If you have any questions, call me.